Morning, good morning, good morning. Hey, Justin.
Hey Laura, how are you?
I'm good. How are you?
Pretty good. It's a bit chilly here, but apart from that, I'm good.
Awesome. I cannot wait to get through all of the things that we have to cover today. For anyone that's joining us, and if you haven't been a part of the prior series, Justin will tell you in a second exactly how you can gather that information and take all the juice from that. But this is like a put it all in, explain everything, and give you start to finish from last financial year to making this financial year a breeze. So, anything you want to say, Justin?
Yeah, so after this, we'll upload this video to the page, but we've got all of the webinars and workshops that we've recorded in this tax series in a single location with all of the downloads and everything. So the checklist, so everything will be in one place, and we'll send that all out in one hit for you guys after this. So you'll have it there forever.
Beautiful. And hit us up in the chat. We'd love to know where you're from, what your business is, where you're dialing in from. We always love to understand who you are. So please feel free to use the chat. And if you have any questions for us, just chuck it into the Q&A and we will be responding there as well. So a big welcome to everyone. I'm going to start by sharing my screen. So we've got some visuals to go through. All right, so this is our tax masterclass, and the areas that we're going to be covering today are the key areas for the 23-24 financial year so that you can be prepped and organized and get that sorted. Then we're going to jump into automating your cash for this current financial year and then making this financial year the best it can be. I'm pretty excited to dive into all these things. There's lots of tips, lots being shared. So I realized that I tend to not introduce myself, and I'd love to just take a second and say, hi, I'm Laura. I'm the head of accounting and tax here. I'm also a mother of 2 kids, and I cannot function without coffee. So thank you for being here with me. Justin.
I'm going to one up you. I've got 4 kids, and I still have the remnants of my second coffee for the day. I'm head of growth here at Thriday. I've owned small businesses in the past, so I know exactly what you guys are going through when it comes to banking, accounting, and tax. And absolutely, our goal is just to make the next financial year as easy as it possibly can be tax-wise.
Beautiful. All right, well, let's jump into it. Let's start by talking about income. So we covered this in lots of detail in one of our previous series, so I'm going to recap that so we're all on the same page. The first thing is that we need to ensure that all sources of income are recorded. And Thriday does that beautifully for you. But if you do have additional income sources, having that somewhere so it's easily accessible for the financial year is really important. And I'll get Justin to show you in a second how easy recording the income is in Thriday. But before we do that, I want to jump into what's taxable and non-taxable income, because this is something that people don't talk about enough. So taxable income is your wages, your business income and profit that you have. But there's things such as government grants, such as child support, such as government subsidies, even lottery winnings. They are non-taxable income. You still need to report them, but you will not be paying tax on them. So it's really important to not just think about your wages and your business income, but also everything else that's going on in your world. And once you have all of this information together, then it becomes really easy to report your income and gathering your key and clear documentation so that if you ever ask questions, it's all there. So I'm going to jump to you, Justin, to show people how easy it is in Thriday.
Sure. And, the problem in the past is that everything's sort of everywhere. So it's not organized, it's not in one place, and it just makes it a real pain in the ass come tax time to collate it all, put it all together, and sort of understand what's what. You can see my screen there, Laura?
Sure can.
Great. So we're in Thriday now. Obviously, like your business income should come into your Thriday bank account. So that's that income sorted. But when you're first setting Thriday up, there's a couple of sections here. You've got the tax profile, where you can add any income that you're going to have outside of Thriday, right? So any employment income, etc., or other net income. So what that does is brings you above or below the tax-free threshold, etc., and enables the tax calculations in Thriday to be super accurate, and for you to not really have to think about that again. Now, the other way to add income into Thriday, if it's not part of your employment income or whatever, is you can go into tax, you come down here and you go into manage balances, and you can add a balance for income, or you can add a balance for expenses. And that's just to take into account anything that happens outside of the Thriday bank accounts. Okay, so if cash payments, for example, or other expenses that you might have, you've spent money with, like you've paid cash or something, this is where you record that in here. So everything is in one place, it's all calculated, all your tax is visible for you to see. So you know exactly how much money you should be setting aside, right? And you see that here in this tax estimate section. That's it.
Awesome. See how easy it can be? Because I know that the people that I have worked with in the past that haven't been using a system like this have spent hours collecting all of the information and kind of going, oh, it's too hard, don't worry about claiming it, and really missing out on some really good deductions. So we've got a poll up here. Love to know your confidence and how you're feeling around this year's tax season. Are you feeling really prepared, somewhat, not very, or not at all? We'd love to know. So don't be shy. All right. While that's happening, I'm going to jump into the expenses side of stuff. So it's really important to make sure that you are claiming everything that you possibly can, because you, especially as a sole trader, the income less the expenses leaves you with either a profit and a loss. And if you're in a profit, that becomes a taxable event, and you pay tax on it. And so the way that you can reduce that is by claiming legitimate things. I'm not saying go and spend more money for money you don't have, because that also doesn't make sense all of the time, but it is important to make sure that if it can go through the business, that it does, and that you can claim things like professional development and business conferences and those sort of things, and travel that is related to business, which a lot of the time that gets paid for out of personal expenses because we're unsure of what is actually possible to claim. And what I would say is, if you have the cash flow in your business, definitely put it through the business, and then you can always adjust the business use percentage. And that's a really cool thing, because most of the time people are like, what's the business use percentage? How do I calculate it? What do I do? And it becomes this really big thing, when in actual fact that's built into Thriday, which is really cool. We also make it super easy for you to organize your receipts. So for any receipt that you get or bill that you get, that can all be in the one spot. Because if the ATO ever want to question anything, you do not want this stuff in a shoebox. So it's really important to make your life easy. Anything you're wanting to add there, Justin?
No, that's it. Like, it's all about just making life easier. Like, why waste time on things that you don't need to waste time on when it can be organized and automated?
Absolutely. Did you want to jump in and show them their business use percentage?
Yeah, absolutely. You need to stop sharing so I can share. There you go. So if I go into accounts and I have a look at these transactions, and we see this expense here, we can go into all details and say, I don't know, I took a client out for lunch and brought one of my kids. You could change the business use percentage here to 85%. And that's it.
That's all you need to do. I love that. Makes it so easy. And it can adjust. So it means that if the next transaction is 100%, then it can be that as well. Or if it's changing for different things, then you have full control, which I absolutely love.
Absolutely.
Awesome. Thanks, Justin. Now, one of the areas that we covered in a bit of detail in the last webinar, but we've had a lot of questions and interaction around, is how to work out what's possible when it comes to working from home. And so I wanted to just cover quickly the two options that you have available to you and an example so that you can then decide which one is likely to be the better option for you. So there's two options when it comes to claiming work from home. There is the fixed cost per hour. So that is a flat 67 cents per hour that you worked at home. You do need to track your hours. So if you work full time, then that's pretty easy to calculate. But let's say it's ad hoc and you do a couple of days one week, nothing the next week, and so on. You do need to know how many hours. It can't just be around about 1,000. You do need to track it because the ATO are targeting this area and will ask questions. The thing that you need to be aware of when it comes to using this method is if you are claiming the 67 cents per hour, this covers everything. So utilities, internet, mobile, all of those things that it takes to work from home. So you can't claim them in addition to this. That's included in that. The only thing that you can claim in addition to this is your computer and office equipment. So the example I have here is, let's say in the year you work 2,000 hours from home, times that by 67 cents, that's a deduction of $1,340. So it can be significant if you work from home. And this is definitely an easy way to ensure that you've got your hours covered and you don't have to try and find those receipts. But it's not always the best way to do it for you.
Laura, what about are the total number of hours capped?
No, they're not capped. It is what you've worked from home, but the ATO are unlikely to accept 80 hours a week for 52 weeks. Because if you were to work a full-time job, you wouldn't be paid for all of those hours. So it does need to be reasonable, but it is, if you can track it, you can claim it. Awesome. The other option is the actual cost method. So instead of looking at the 67 cents an hour, you can claim your actual costs such as electricity, gas, internet, mobile, potentially, some rent. You do have to be careful when it comes to rent and mortgage, because if you're living or you own a home and you say that you're working from there for a business point of view, then when you go to sell your house, you might have some capital gains tax implications. So not always the best thing to do, just a note there. You do still need to track your hours so that you can work out what the business percentage is. So if you are working from home full time, but you live there 24 hours a day and that sort of thing, what is the percentage of the hours that you're there? You do have to be able to justify that. And then you can only claim the business percentage. So the example here is, let's say the total cost that you've paid for your electricity, gas, internet, and yes, it's probably more than what I've given in this example, but to, demonstrate what it could look like, $4,000, 20% business claim, that's $800. So you can see immediately that if you were to do it via the fixed cost per hour, you'd be better off in this example than the actual cost method. And it is worthwhile for the first year, if you haven't done this before, to look at both and claim whichever one is the higher amount, because both are correct. And this is where people get really confused. They're like, oh, but is it okay to claim the higher amount? It is, because you're basing it on legitimate expenses.
Do you find, Laura, that some accountants will just take the easiest route rather than sort of digging deep and looking into what is actually best for you?
Yeah, they do. And I know accountants out there will probably shoot me for saying that, but that's okay. What it really comes down to, and the tip that I would give, is if you can justify your business percentage of actual costs and have the information readily available, then your accountant can look at both methods for you, rather than you having to do it all. But if you haven't tracked your hours and it's really vague and you don't have the receipt, or it's somewhere and you might have paid it out of some bank account at some point in time, then the accountant definitely goes for the how many hours have you worked from home, 67 cents, there we go, done. And you can't do both. You can either do one or the other.
Yep.
The other area that I know can be a bit confusing for people is assets and liabilities. And I'm actually super excited for you to show everyone on this webinar how easy it can actually be. So as soon as I say assets and liabilities, most people are like, ugh, do I have to really know about this? What do you mean? It seems so complicated. Depreciation, what? And it's fair enough because the ATO haven't exactly made it easy reading to understand these things. But the important things that I want to explain to you today is that you are missing out on deductions if you're not claiming your assets, if you're not putting it in. I know it can seem like hard work to find the documentation or to know exactly what you need to do, but putting these assets, so that is computers, vehicles, office equipment, any of those things that are legitimately assets for your business, they can go in, and then the depreciation side of things in Thriday happens automatically. So you don't have to use your brain to calculate it. But the depreciation is a deduction. It is reducing your profit and therefore the tax that you pay. And so the instant asset write-off is still available for the 23-24 financial year, and that's $20,000. So if you had spent up to $20,000 on any of these assets, computer, vehicle, you name it, tools, then you can write them off immediately, which means that you can take the full deduction rather than it being depreciated over time. And let's say you've got a loan related to it, that also needs to be available so that we can claim interest and make sure that you are maximizing your deductions here. So I'm going to stop sharing for a second. And did you want to show people how easy it can be?
Sure thing. So once again, we simply go into tax, and then we go down to manage assets and liabilities, and we can add an asset. Just follow the bouncing ball here, super easy. Again, business use percentage is important here, whether it's financed or purchased with a trade-in, also very important. And then obviously the purchase date is very important because the rules can change from tax year to tax year, or financial year to financial year, and then GST, etc. And then for liabilities, it's exactly the same, right? Basically, you can choose from the loan, whether it's a mortgage or credit card debt, name, description, balance, start date, business use percentage, and add it. And then that all goes towards automatically, without you having to do anything, your tax estimate here with these deductions being claimed. And then, as always, we estimate the tax refund or the tax amount that you're going to need to pay. So that's calculated for you automatically. And if that's in the negative, then the amount of money, like you want to have that set aside in a bank account, because that's how much you're going to need to pay at the end of the year, just for peace of mind.
If you do change the tax estimate year to last year to just show a payable position.
That's better.
Yeah, so you can see here that it was quite a good year, and there's a bit of a hefty tax bill.
Yeah, hefty tax bill. And then this year we'd be expecting a refund at this point in time.
While we're talking about tax and refunds and payable amounts, one thing that you do need to know about being a sole trader, especially if you don't have employment income, is that if you've not paid any tax throughout the year, so if you're not paying PAYGI installments or tax installments, then you will not get that money back like you would if you're an employee. The reason why you get a refund is that tax has been paid and you've overpaid your tax, and therefore you're getting a refund. So if you haven't paid the tax office anything and you're in a loss position, that is carried forward, meaning it is the ATO are told that you're in a loss position, and then when you earn a profit, that loss is deducted from it. So unless you have wage income or you've paid tax in some form, you're not necessarily going to get a refund. So something that you need to just think about when it comes to being a sole trader.
Yeah. And do we have any questions yet? Feel free to pop questions into the Q&A or the chat.
Yeah, awesome. All right, let me share my screen again. Now, we promised that, so we've covered the tax side of things for the financial year 23-24, and we're going to jump into managing your cash and making it super simple. And so I'd love to introduce you to the Profit First methodology. And before I go into explaining that, I wanted to explain how the accounting principle is broken. And that's the first thing that you see on the screen, which is the cross through of sales minus expenses equals profit. That is literally the accounting principle. It's looking at what income did you come in, less your expenses, did you happen to have a profit? That is an accounting principle, but it's not necessarily going to tell you how you've spent your money. And this is where I find that a lot of business owners get super stressed, because you might have a profit at the end of the year, but you're like, well, where's my money in my bank account showing me that? And so what I want to introduce you to is a different way of thinking about it, because the accounting principle alone focuses only on the numbers and what we need to do for tax. And it ignores the human behavior. And so if we were to follow, let's get all as much income in as possible, and I'm going to spend all of these things that'll hopefully, make my business more successful, more profitable, and then you kind of look, and profit's an afterthought. We want to change that. We want to really think about what you do as a human being, and we don't want to change your habits. We want to leverage them, and Profit First itself does that. What do I mean by that? Most of the time we have one bank account as a business owner, and it's really hard to know what's coming in, what's going out, what money is yours, what money do you owe to the government, will I have a tax bill, all of those things. You don't have that visibility. Yet I bet you're checking your bank accounts every day to make decisions. And so with the habit of checking your bank account, we want to give you that clarity. And so what does that look like? It looks like flipping that formula for you. We're saying from your income, you put aside your profit, which means that you have cash in your business and that you are having a business that is working for you. And then whatever is left over, you have to spend on your expenses. And it is based on multiple bank accounts that have a purpose. So an interesting thing is, whatever we see first is what we do as a human being. It's another habit. So if we see first money coming in and then profit being put aside, our brain is naturally wired to go, what can I do to increase my profit? Rather than going, oh, let me spend all of my money on expenses, which is the prior formula. So it is actually based on human behavior and psychology, and that the profit amount is a purpose. Why do you want to be profitable? Is it to do something bigger in your business? Is it to have a better lifestyle? Being really clear on that purpose and utilizing this formula makes such a difference, and it allows you to tap into the part of your brain that allows for creative thinking and wealth creation. You have a bit of experience with the Profit First, Justin. What are your thoughts?
Yeah, so the psychology behind it is what really intrigues me. There's a book called Hooked by Nir Earl, and what it's about is it's for people like me in growth and marketing, how to get people hooked on your products, right? Social media is kind of the negative example, but Thriday plus Profit First is a really positive example. What you need a trigger, an internal or an external trigger that tells someone that they should do something. In this case, it's money hitting your bank account in Thriday. And then you need to take an action, and the action would be putting aside profit, right, in this case. And then what that creates is basically a reward, right? So there's two things here. You put aside your profit and you put aside your owner's pay. The owner's pay is the reward that you get immediately that wants you to keep doing this thing. And the profit is the investment part of the step. You create an investment, and what you see is that profit growing over time. So you don't want to change that habit. You don't want to stop doing that thing, because you can see it growing, and you're getting the immediate benefit of the owner's pay. So what I'll do is, in the same resource that we've got all of these videos, I'll include a link to an article I wrote about that, which really explains it in detail, but the psychology behind this, once you start doing this, it's highly unlikely you'll ever stop doing it, right? Because of the psychology, which is really important.
Absolutely. And the amount of people that say to me, oh my God, I actually have more money even though I'm not earning more, which kind of feels like a miracle because you haven't changed what you're doing. You've just created this habit and this cycle that really empowers you. So we've given you the theory behind it, but what does it actually mean? So you're probably wondering why I have dinner plates as the visual, and I want to explain why this has been chosen. I'm a foodie. It's one of the things that I love to do in my life is to eat. And what I've realized is if I'm going to be eating and I'm eating off a really big plate, or if we look at the business one bank account, I'm going to eat everything on my plate. If it's a huge plate, I'm going to eat all of that. If it's a small plate, then I'm going to eat less because I physically can't put more on my plate. And this is the same principle when it comes to your bank accounts. Your income account is your big plate. So all of the income comes in, and the only purpose of that bank account is to receive that income. And then you distribute it. So it goes down to zero. So then it fills back up again, and so on and so forth. That is the only purpose of that income account. Then from your income account, you're putting a percentage towards your profit. In this example, it's 5%. So anything that you earn, 5% goes to profit. So again, we're focusing on the things that are important to us, profit being the first one. The second is owner's pay. And as Justin explained, that's another really important reward. You work and do all of the things in your business to make it successful, to be what you want it to be. So therefore, you need to be paid. You shouldn't be an afterthought. And so that's the second thing. These are general percentages, but in this example, 50% of what you earn should be sitting in the owner's pay account so that you can take a regular wage or drawings from your business. Then from there goes to tax, because money is going to have to be paid to the ATO at some stage, especially if you're profitable. So why not make it easy on yourself? So 15%, and in some cases it can be less, going to your tax account. And then what's left over gets allocated to your expenses account. This 30% is really what has been benchmarked over the years for a number of businesses. Most successful businesses can run with 30% of their income being expenses. If you're running at 90%, or even in some cases, more than 100%, you will be going backwards and you're creating a lot of stress for yourself. So as you can see here, allocating to these different bank accounts means that when you check your bank account in the morning, what incomes come in? I can follow up that invoice that hasn't been paid. You have that immediate trigger. What profit do I have? Oh, I'd like to see that go. Oh, I can pull this amount to pay myself. I got the tax bill, no stress. And do I have the money to buy that thing that I think will really help my business? Probably not. I'll wait a week. Do you know what I mean? Like, that is just from your bank accounts. This is how it works. And what we've done is automated and made this super easy for you to set up and automate the fund allocation. So these percentages. Before Thriday, it would be a matter of manually calculating what the dollar amount is for these percentages. And we've done that for you by having this allocation feature already built in. So I'm going to stop that share so you can.
All right. So if you are new to Thriday, to set that up basically in a couple of clicks is you would come into settings, you would go to accounts, and you would hit this profit first accounts button here. And as you can see, we create this page and it creates these accounts. And these are all legitimate bank accounts, all backed by the Commonwealth Financial Claims Scheme, up to $250,000 per account holder. They get their own BSB account number. You can transfer money, pay with BPay. The money is all yours all the time. And you can see we've set the percentages here. If you want, you can tweak them and change them based on your personal situation. But this is the kind of rule of thumb and what works for the vast majority of people. So you shouldn't really need to have to tweak it. And you can set your allocations. So immediately when income comes in, or if you'd prefer, you can set it to a schedule, right? And then if I click open accounts here, bang, it's all done for you. So that's, that's an absolute game changer. In the past, and Laura, you mentioned, that accounting method is kind of broken. Well, banking is broken, right?
Yes.
They would charge you $10 a month for an account that you could take money in and out. They wouldn't pay you very much interest on that money. They'd make it difficult for you to open more accounts because it was more time for them. You'd have to go into a branch, fill out paperwork to even do it. So by the time you set this all up, it's just too much of a headache to bother, right? So people don't do it. So we've absolutely changed the game when it comes to banking to help your business be more successful.
Awesome.
And just one of the coolest things that we've just implemented as well is interest bearing on every single account that you have in Thriday. So you'll set aside 15% of money in your tax, but that money won't just sit there doing nothing. It'll actually be earning you money. So think about this. If you have an average of about 11 grand sort of in your Thriday accounts over the course of a year, Thriday basically pays for itself.
I love that. There's not many places you can get that. And whilst you're on that, Justin, we do have a question around GST. So
sure, you go.
So GST isn't an expense as such. It's a separate bank account. So if you're registered for GST, that GST would come off the top because it's not your money. It's not your income. It'd go into your income account and then you'd allocate the 10% to GST. Then you do profit and the rest of the allocations. Not everyone's registered for GST. So if you're not, you don't need to set up that separate bank account. You can also incorporate the GST in your tax percentage if you don't want another bank account. But in Thriday, it's super simple to just add GST 10% and be done. So that's how I would allocate it to answer your question, John.
Yeah.
Awesome. I'm just checking if we've got any other questions, and I can see we've got a chat here. So impressed from Jonathan. Love it. Love it. All right. So if you're going to want to make this financial year really easy and you need to take one action today, it would be to set up the Profit First methodology and in Thriday, if you want to do it in 2 minutes rather than 2 weeks or a month with other banks. All right. So we've sorted the cash side of things for you. Are you ready to make this financial year a breeze? Is the question that I want to ask all of you. And what does that mean? We promised you that we would cover some mindset, some tips, and give you everything that you need to make this financial year a breeze. So let's start with, go ahead.
Quick one, Laura. You've been talking to a lot of people about a lot of different tax issues, given the time of year that it is. Tell us what the main sort of problems people are having are.
Yeah, so the biggest problem that I'm coming across is that people haven't had the support to get on top of their finances. They haven't had the systems that they currently have in place, but they didn't prior, and it's a bit of a mess, and they've gone and asked for help, and it's just been a really expensive exercise without much help, and that's kind of stopped them from wanting to even sort anything out when it comes to their tax and knowing where they actually stand on a financial basis. And so I've been having heaps of conversations about how Thriday can really help a lot of these things, but also that a mess isn't a mess to a person like me. Do you know what I mean? It's like everything's figure outable. And if you can get that sorted and you can concentrate on this financial year, it's going to be a breeze.
Yeah, like if you've got 3 or 4 years backed up of tax, don't let that overwhelm continue in the new year. Just get it done, get everything sorted now and stay organized, and you'll be ready to rock and roll.
Absolutely. Yeah, and ask questions, ask for help, because there is definitely support here for you. All right, so what are one of the things that we can do to make this financial year a breeze? And this is a topic that I could spend forever on, but I won't, because we've got a lot of different things to cover. But I really did want to talk about mindset for a second. And we tend to know that mindset's important, but what does it actually mean? And I've got 6 kind of tips for you to start mastering your mindset. The first is to actually forgive any of your past financial mistakes. I have made them. I'm sure you have made them as well.
I
No one is
absolutely have
perfect.
made them.
You want to tell us a bit?
I'll tell you quickly. I had a business way back. I was in the army for 7 years, and I got out of the army after my wife went for a job at eBay. We started selling all the clothes we didn't wear anymore that had a brand on them, made some money, and then I started going to garage sales and basically replaced my military income. I had no idea about business, no idea about finance, and started importing a lot of stock, and made a lot of money. When things were going well, it was going really well. Made some bad decisions financially in terms of buying a bunch of stock that needed to be there before summer. It didn't get there until winter. Cash flow absolutely dried up. Put me to the wall. Had a new baby, had a mortgage and a new house. Went into this spiral of becoming very close to going bankrupt, but sort of worked my way out of that. And then I just know that if I had had a tool like Thriday at the time that was telling me what I needed to know about tax, cash flow, and all of those good things, I could have made some very different decisions, but I just didn't know what I didn't know. So, that's my story in short.
Yeah, thank you so much for sharing that, because like I've been there too. I was a single mum and everything that I had built kind of left. And I made some really ridiculous decisions thinking, if I earn a quick money to get around, it's going to make a big difference. We've all made mistakes, is what I'm trying to say. So really not hanging on to that and moving forward from that is super important. The other thing is to understand your thoughts and emotions that you might have around money. So especially if you've made these mistakes and it's not long ago, you might be feeling a bit of embarrassment or shame or overwhelm when it comes to even just looking at it. And Justin touched on this point. Just being aware of what is actually going on for you is the first step to changing your behavior and making things better for you. The other thing is realize that comparing yourself to others is a losing game. Swim in your own lane. Look at how your business can be better. Why are you in business? Is it serving you? Or are you following some sort of formula that you think will work and it's not actually giving you the goals and money that you want? Don't compare yourself to someone else.
Absolutely focus on what you can control.
Absolutely. The other thing is to work on forming really good habits. And as you've seen today, a lot of this is done for you within Thriday. It's not like me trying to go for a run and get myself there. It's never going to really happen, no matter how hard I try at this point in time. If there was a Thriday for running, maybe. But it is about forming the good habits and habit stacking. So if you're implemented profit first with your allocations, that in itself creates a habit and you start to make different decisions because it's showing you what you need to see.
Yeah, one of the best books you can get is Atomic Habits, and one of James Clear's quotes out of that book is, "You don't rise to the level of your goals; you fall to the level of your systems."
Mm-hmm. Totally. Yeah, we need to put that quote everywhere.
Mm.
The other thing is to use a money methodology that works for you as a human, and we've given you that key today. So again, let's implement it. And then, of course, the last thing to really set you up for success is to have the right support team and tools. And so if you don't have a support network or a business network, we actually have a community that you can join as well. Or you're not using the tool that works for you, then jump on board. Awesome. Now, let's talk about bringing in the money and some other tips that's going to make this financial year way easier for you. Let's start with invoicing. What are your tips there, Justin?
The best tip, I can't remember whether I heard it from you or from Katie, who's the now CEO of Profit First Australia and New Zealand. But send your invoice before you do the work. 10% of people will pay you before you've even done the work, right? Which helps with cash flow. That money is better in your account than it is anywhere else. That was a bit of a mind-boggling tip for me.
It's true though, because people like there's a commitment and they know you'll do the work and they just want it done, and so they'll pay. So that's one tip. The other thing is to automate your collections. So have auto reminders put in, and a reminder doesn't have to come after the invoice is due. It can be a reminder that's saying, hey, coming up in 2 days, don't forget. So you think about it that way, and remove you if this is an area that you find really uncomfortable to invoice people or follow up money and that sort of thing. Even these 2 tips alone means that cash flow will flow way better.
Exactly.
The second is expense management. So Justin and I, we were talking earlier this morning about this whole expense management, and you're talking about the operating expense account. Do you want to talk to us about that?
Yeah, look, I think my biggest takeaway, from Profit First, reading that, talking to a lot of people about it, is if you can see that operational expense account growing, then your business is on the right track. It means you're not spending every dollar that you're definitely not spending every dollar that you have, because you're already putting away profit and owner's pay. But that operational expense account, if that's growing, then you can start making really smart decisions about your business. Should I spend more money on marketing? Should I hire another staff member? Should I buy new tools? Should I buy a laptop that's going to improve my efficiency? You start to make those decisions because that money is there for business expenses and business expenses only.
Absolutely. Another thing that I recommend once you've got used to the operating expenses account is potentially splitting that out more. So I know for a lot of people, the marketing, knowing what marketing they can actually spend and having a percentage out of the operating expense percentage going to that, so that you can see physically what funds you have available for it, really helps. Or if you're wanting to hire someone at some point in time, creating that staff account out of the operating expenses percentage and putting 1 or 2% towards that, you'd be really surprised at how quickly you can grow the funds for the things that you're feeling uncomfortable about. So yeah, like make it work for you is what I would say when it comes to your expense management. And the great thing is if you're looking at what expenses you can cut and are necessary, all you need to do is look in one bank account, because its sole purpose is just expenses. So you can quickly identify the things that you can cull, renegotiate, or that are necessary. So if you do those things from the expense side,
and the other side of the coin with expenses is actually claiming the expenses that you should be claiming. Now, every time you get the best way to minimize your tax is to claim your expenses. That's it. Don't try and get tricky. Just take a photo of your receipt, claim the expense, make sure you're organized. That's it.
Awesome. I can see here John's made a comment that rather than an invoice, a deposit sits better with a client, and I do tend to agree.
Good call.
So thank you for that. And then the third part, and I know that this is an area that a lot of business owners have lots of questions about, and we might run a separate webinar specifically on this, but that's pricing. What are your tips, Justin?
It's easier to come down from an expensive price point than it is to go up from a cheap price point to an expensive price point. So start high, work your way back if you feel like you're getting pushed back at a higher rate.
Love that. And it is true. It's easier to go, do you know what? I can do this for a better price than going, hey, I didn't price this correctly, I'm going to increase it.
Yeah.
My tip around pricing is, and like I could go into all different pricing strategies, which will need its own webinar, but the basic way to really truly ensure that your pricing you're nailing each time is to know your true hourly rate. And what I want to explain is what that actually is. I'm not saying go and price on an hourly rate, because there's better ways to price. But what I am saying is be aware of what your true hourly rate is. It's not just what you're paying yourself, but it is, what you're paying others, your overheads, if there's, staff and superannuation that you need to pay, if there are other sort of like, review expenses and that sort of thing. It's literally everything that needs to happen to keep your business running and serve your clients in a way that brings them value. And so that $30 an hour that you think might be the cost to you is generally triple that. And so really knowing your true hourly rate is going to be key to ensuring that you're not underpricing. And we've got a little calculator coming.
Yeah, and this comes back to mindset a bit as well. One way to flip your mindset about pricing is thinking about the outcome, and not the outcome for you, but the outcome you're delivering for your client, right? So what are they going to get out of it in the end, and how much is it going to be worth to them to, because generally they can't do what you're going to do for them themselves, and generally they're going to get quite a big benefit out of the thing that you're going to do for them. So flip the thinking to outcome based for the client, and set your pricing accordingly.
Awesome. So yeah, the 3 things that if you tackle them and get a system that works for you is invoicing, expense management, and pricing. This financial year is going to be a way better year than any other year. And to wrap it up, the last point is we really want to ensure that you get the right support, and support in terms of team, but also tools. So I'd love to know what support and tools you currently rely on. Are they just financial support tools? Is it a business support networking group? Do you have a mentor? Or is this an area that you could really work on? Because as you've seen today, Thriday is definitely a tool that makes your life easier when it comes to just running a business and knowing where you stand from a cash flow and tax perspective. But do you have somewhere where you can ask questions?
It's all about efficiency. If you can get more time back in the day to, either do more of whatever it is you like doing, or, spend more time on your business, spend more time camping, whatever it is. No one gets to 85 and says, I wish I spent more time managing my financial admin, as an example.
Yeah, absolutely. And so it really is looking at what support do you need and getting that set up, and everything else will flow from that. And I can see here, Jonathan's put a comment in the chat. It said 100% started getting a deposit for consulting and people pay. So I'm ahead and not chasing work done. Love that for you. That's so awesome. And thanks for sharing. So Evan's also posted in the chat, if you're wanting to discuss setting up your life to be easier, your personal financial situation, or, talk about what you could really do to set yourself up to make life easy, feel free to jump in and take 15 minutes with me. It's a free call. There's no pressure. Happy to answer any questions and talk about what works for you. If you're trying to improve your cash flow, we can look at that. If it's more about what your tax position is or that overwhelm you want to get rid of, feel free. I'd love to chat to you. And the whole team here at Thriday will show you anything you need to know about how Thriday can make your life easier.
Absolutely, here to help.
Awesome. All right. So that's all of the areas we've covered: how to make last financial year easy for you, how to fix your cash, and what tips you can do right now to make 2025 a breeze. So as always, feel free to reach out if you have any questions, and I look forward to talking with some of you. Thanks Justin.
Laura.
Bye.
See you guys.